Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The US Fed thinks inflation risks outweigh concerns about their labour market. But first, in its familiar yo-yo pattern, US mortgage applications fell last week by 1.4% from the prior week, but that makes them 10% higher than the same week a year ago. The softness over the past week is all related to softer refinance activity, even though benchmark 30-year mortgage rates changed little. And the US Fed released the minutes of its July meeting overnight, and that revealed the stances of two Trump supporters on the 9-member voting panel. Almost all officials supported keeping rates unchanged at 4.25%, with those two dissenting in favour of a quarter-point cut to protect a weakening job market. It seems ironic that they should use that excuse because Trump fired the Bureau of Labour Statistics chief for producing results that showed the American labour market was weakening. One of the two, Christopher Waller, is considered the front-runner to replace Powell when his term ends. The two dissenters seemed isolated in this group at this time. But that has not stopped Trump supporters making up fraud claims against sitting Fed members in an effort to twist the voting panel. These minutes had no impact on financial markets. There was a well-supported US Treasury 20-year bond tender earlier today, and that delivered a median yield of 4.82%. That was lower than the 4.89% at the prior equivalent event a month ago. In Canada, a survey of small business owners turned more positive in July, even though their trade association claimed that 38% of them won't last a year without tariff changes. Across the Pacific, Taiwan turned in another very strong rise in export orders, up 15% in July from a year ago. After the 25% rise in June, this remains impressive, but it is what analysts have now come to expect. In Indonesia, they had a central bank review of their 5.25 policy rate yesterday, and no change was anticipated. But in fact, they did cut by 25 basis points to 5%, the fifth cut of the past year. They are confident inflation will remain contained and are moving to support the need to stimulate economic growth in line with the economy's capacity. In the UK, their CPI inflation rate rose to 3.8% in July, its highest since January 2024. Driving the rise were cost increases from transport, holidays, food and fuel. These were offset by slower increases in rents, even if they are still rising fast. They have their own twist on the CPI called the CPIH, which they emphasise, which adds in owner-occupier housing costs, and that rose 4.2%. That draws in imputed rents, stamp duties and the cost of maintenance improvements. Either way, they have a sharpish inflation problem. In Australia, Austrac said real estate agents are one of the keys to tackling scams, drug trafficking and organised crime. Along with banks and lawyers, real estate agents are going to get more focus on fighting money laundering. The US Treasury 10-year yield is now at 4.29% and down 1 basis point from yesterday. And the price of gold will start today at $3,347 an ounce, up $31 from yesterday. American oil prices have stabilised at just over $62.50 a barrel, with the international Brent price up $1 at just over $66.50 a barrel. And the Kiwi dollar is now just on 58.3 and down a sharp 70 basis points from yesterday following the dovish RBNZ monetary policy review. Against the Aussie, we've fallen 80 basis points to 90.6 Australian cents. Against the euro, we're down 60 basis points at 50 euro cents. That all means our trade-weighted index starts today at just under 66.1 and down nearly 80 basis points. And the Bitcoin price started at $114,270 and up 0.7% from yesterday. Volatility of the past 24 hours has been low, though, at plus or minus 0.8%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.